Good morning, everyone, and welcome to today's market update. Let's start with a quick macro overview. U.S. equities moved lower, with the S&P down about 0.16%, the Dow falling 0.9%, and the Nasdaq lower by 0.22%. The main driver was the continued pullback in oil, now trading around $84, which helped ease inflation concerns and supported a risk-on move across the market. Today we're watching S&P Global Manufacturing and Services PMI, key data for economic strength and market direction. Next, let's take a look at sector performance. We're seeing a weaker setup across the board. Most sectors are moving lower. Materials, industrials, and healthcare are leading to the downside, while technology and financials are also under pressure. Energy is the only sector showing relative strength, holding up better than the rest of the market. We also have Core & Main reporting before the open today. It's already on the radar this morning, along with a few other industrial names. CNM is up around 2% over the past 5 days, so we're seeing some positioning into the report. At the same time, we're also seeing some weakness in a few names this morning. But it's important to note, these are not all post-earnings reactions yet. For example, CDLR is moving lower after releasing results, despite reporting solid Q4 numbers. Revenue around $195 million and positive earnings. So, the reaction here isn't great. We're also seeing weakness in HSAI, even though the company reported strong revenue and shipment growth. But again, the stock is trading lower after the release, and names like LENZ are also under pressure. Now let's take a look at where we're seeing the strongest moves. Here in the most up list, NTGR is leading, up about 13%. Let's take a look at what's driving the move. We have news that the U.S. is banning new foreign-made routers due to security risks, which is likely supporting names like Netgear. We're also seeing names like FBIN and TAOX showing solid strength, both up around 10%. So again, we're seeing how news can drive strong moves in individual stocks. But what's even more important is what happens after the initial reaction. So today I want to show you a tool I use to track that post-earnings announcement drift. Very often, the move doesn't stop on the earnings day. A stock can continue trending for days or even weeks after the report, and that's exactly what we call drift. The idea here is simple. Investors don't always react correctly right away. Sometimes they overreact, sometimes they underreact, and that creates follow-through after earnings. So how does this actually work? The tool looks at the company's earnings history, usually the last 20 or 40 quarters. Then it analyzes the initial reaction and what happened after, and based on that, every reaction falls into one of 4 types. Drift A, positive underreaction; drift B, positive overreaction; drift C, negative overreaction; drift D, negative underreaction. Now let's look at real examples. For instance, we have F here. You can see a very strong setup. Average drift around 24%, with potential moves going up to 50% plus, and accuracy at 100%. What this tells us is important. In similar situations in the past, after earnings, the stock didn't just spike. It continued to trend higher. Another example is AMCR. Here we also see strong drift, average move around 25%, and again, very high accuracy. So this suggests consistent follow-through after earnings. Now compare that to something like EXC. Here, the average drift is actually slightly negative, which tells us that even after earnings, the stock tends to struggle and not follow through. So this is exactly how I use this tool. I'm not just looking at the earnings reaction. I want to understand what usually happens after. And the key idea is this: if we see underreaction, there's a higher chance of continuation. If we see overreaction, very often the move fades. So this is not about predicting the exact move. It's about probabilities, what tends to happen next, well, based on real historical behavior. And that's what makes this really powerful. Because a lot of opportunities come after earnings, not on the first move. In the screener, I just go to Drift PEAD, select Drift Name, and choose the type of reaction. And it instantly filters the setups I want. That's it for today's market update. Thank you for watching. Subscribe or sign up to our research, and don't forget to do your own research.